The way I think about forever stocks are companies that I feel confident are going to be around for the next 10, 20, 30, perhaps even 40 years. And Netflix and Home Depot fulfill those descriptions for me. I feel Netflix has earned its position as the leader of the streaming industry. And even if content consumption changes to a different format, I feel Netflix has developed enough skill in content creation where it will find its way regardless of the format of content consumption. Home Depot, meanwhile, is the leader in the home improvement industry. And of course, homes are going to be around forever. They've been around forever. They will continue to be around forever. And Home Depot has demonstrated it can take a leadership position and withstand competition from e-commerce companies. So Netflix and Home Depot certainly fulfill that requirement in terms of being a forever stock. But let me share with you some of the other reasons why I like Netflix and Home Depot stock as buy and hold forever type of investments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, along with its sustainability longer term, one of the reasons why I like Netflix stock right now is because of the valuation. It's trading at a forward price to earnings of 29.04. And I think given its growth prospects, it's a relatively cheap valuation. The company's demonstrated skills, which I'm going to share with you how it results in improved financial performance. So in its latest quarterly update, Netflix shared with us that its operating profit margin has jumped to 28.1%, up from just 21% in the same quarter the prior year. What's more, its revenue growth has accelerated again for 4 straight quarters, from 2.7% to 7.8% to 12.5% to 14.8%. So it's increasing revenue growth while increasing profitability. 2 skills that I like to see. Furthermore, its streaming memberships are increasing at an increasing rate as well. So the second derivative is increasing here, from 4.9% growth to 8 to 11 to 13, now 16% growth, up to 269 million subscribers worldwide. Its initiatives like the lockdown on password sharing, not allowing password sharing, adding the advertising tier, have boosted membership growth. What's more, over the last decade, Netflix has developed its skill in content creation. So it doesn't depend on other companies to create the content and Netflix license the content. It can create its own content. And given its large scale now with over $9 billion in quarterly revenue, that gives it a large budget for content creation, and that helps fulfill and instill its competitive advantage. Those are some of the reasons why I think Netflix is an excellent investment. Let me share with you 2 more. So if you look on its balance sheet, Netflix reports its content assets on a net basis. What that means is it depreciates its content assets. So let's say, for instance, it spends $1 billion on content. Over the years, it writes that down. It tells the investors and it tells the taxing authorities that these assets are declining in value, and eventually on its balance sheet they go down to 0 as if it doesn't have any of those assets anymore. But the reality of content assets are that they are forever lasting, right? You create a movie and that movie can be on your platform forever, and the next generation of subscribers can enjoy that content, especially some of the content that becomes extremely popular, like for instance its Stranger Things series. That content will remain relevant for a very long time, and the next generation of subscribers can enjoy that content anew, and then even people that watched that series a few years ago will tune back in and watch it again. It'll be a reason why people will continue paying for Netflix subscriptions, because they feel like every once in a while they'll turn on and watch something that they really liked from last year, the year before, 5 years ago, whatever the case might be. And so you build your platform in this way with all of these content assets that keeps subscribers paying. If you're paying $10 a month or $20 a month and you feel like there's all of these things that you would want to watch, you feel like you're getting your money's worth and you're not going to cancel. So these industries, this asset is very attractive and one that I like to invest in here. And finally, if you look at over the last decade, its revenue and operating income growth has exploded up to $34.9 billion in a trailing 12-month period, which has boosted its operating profit to $7.87 billion. So I like Netflix as a buy and hold forever stock. The next one I'm going to highlight is the Home Depot. It's trading at a forward PE of just 20, and I think this is an attractive valuation for Home Depot. Now, one of the reasons I talked about that is because of the home improvement industry. And in 2023 alone, home improvement sales in the US amounted to $544 billion. By 2027, this amount is expected to reach over $600 billion. And Home Depot is the leading player in this industry. So it's going to benefit from the growth in this industry as the leader of the industry. Like I mentioned, homes are going to be around forever. Home improvement is going to be always needed because things get old. They need to be fixed. They need to be repaired. And you got to go somewhere to buy those things. Home Depot is the place that people go to get those things more often than anywhere else. Now, Home Depot, just like Netflix, has done a great job of growing its revenue and profitability. $151 billion in trailing 12-month revenue and $21 billion in trailing 12-month operating income. Now, Home Depot has hit a bit of a slow patch here, and that's because of the big jump you notice here. During the pandemic, home improvement was surprisingly popular. People spent more money on home improvement than usual, and that created a surge for Home Depot. And now it's creating a little bit of a gap, right? If you painted your home in 2021, you're probably not going to paint your home again for several years. If you did a major renovation, if you upgraded your kitchen in 2020 or 2021, you're probably not going to do that for another 5-10 years. If you fixed certain things, you're probably not going to fix them again for several years. So that's why there's a little bit of a gap right now as people spend more of their time and money away from home. And those improvements they made in 2020 and 2021 will last them for a few years. But I think that's created an opportunity for long-term investors to scoop up Home Depot stock at a relatively cheap valuation while it's in this little bit of a lull. Because remember, home improvement never goes out of business. Home improvement is always needed. It's an essential. If something breaks, you have to fix it. Certainly, some of that incremental home improvement demand fluctuates with the economy, right? Sometimes you don't need to make an upgrade to your house. It's more of a choice, and that discretionary spending might fluctuate up and down based on the economy. But there's a core spending that needs to be done. Something breaks, you have to fix it. You can't put that off. And so that amount of spending will continue. And then with the economic cycle, the ups and downs will bring Home Depot the boosts of revenue and then the declines in revenue. Overall, it will lead to growth for Home Depot, as you've noticed over the last few decades. So if you're looking at potentially adding stocks to your portfolio where you could buy it and hold it for 10, 20, 30 years, Home Depot and Netflix are excellent choices in my opinion. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.